Sean was out today, Sean Powell, my partner, and so today I did his Forex Basics course. We talked about basic trend lines, and one of the things off the euro versus US dollar here today was that the market had moved above this trend line, this channel trend line, indicating a acceleration of the pace to the upside here, and that acceleration, however, stalled. That level stalled at this ceiling here around the 146.54 level. We had targeted that 54 level as a ceiling for the euro versus US dollar. Where did that level come from? And we targeted it on Friday. We talked about it here today. That level came from this area the last time the market was at this 54 level. I'm going to zoom in here just to show you this 30 to 54 level. The market moved up toward the 54 level, found some sellers, and then we came up to this 30 level, found some sellers against that, moved up to the 54 level. That's where we really defined it in this area right here, where we defined 54 as a ceiling here for the euro versus US dollar. As you can see, our ceiling then became a floor during this part right here. And when we broke down before moving sharply to the upside here, we fell down to our other level, this 30 to 54 level. So we had this level defined, and I knew that it was more defined as well when you came back to where the market started its free fall to the downside. And when the market fell right here, what do? We came down to the 146.54 level. Actually went to 53, bounced up a little bit, and then fell through that level, and that started this whole trend move to the downside here. That trend move continued until it started to move back up, and that's where we end up right here, where we came back up to the 54 level, held that level here today. That provided a ceiling. This horizontal trend line. The market fell through that trend line at this point right here, and then it was to the downside here. Our range for the day was very narrow. It was very narrow indeed. In fact, the range in the New York session encompassed this small area, this 44 pip area here, until the market extended the range to the downside here. You can kind of guess that was going to happen. Why? Because the overall range was a mere 66 pips that encompassed this high up here and our high from the New York session, or our session from, or our range from the New York session, a full 66 pips, folks. That would have been the narrowest trading range going back to Good Friday, the holiday when most of Europe was closed and the U.S. was preparing for the Easter weekend. So all of that is not indicative of a typical Monday. Monday that's should not have that type of range. So we saw the range extension. Range extension came down to 50% retracement. Now we have a decision to make, or we're going to be using this 100 bar moving average as our decision tree as we head into the night session. As you can see, that level corresponds roughly with this our low for the day, where we had a floor low at the 91 level. So all of that is coming together at this 91 level, and that's going to be our early resistance on the upside here in the Far East session. Stay below that level, and we should see further selling pressure. The selling pressure that could take the market down to the 53 level. If we break below that level, we may see this market trend or counter trend back down to the bottom end of our channel here. Would make sense, right? So, you go up to ranges, and then we have a move to the downside. We extend the range, and then we have a move to the downside. So don't be surprised. Stay below that top side resistance. You can see the market back down to our trend line here, or our 100 bar moving average, and both of them are tracking here together. This is like the blue line's like a snake going along the line here, so they're both at the same level. And as time goes by, we're going to see that move higher and higher and higher, maybe toward this 38.2% retracement line by the time it goes and tests that level. So don't be surprised. We'll be watching that in the euro versus US dollar. Sterling versus US dollar fell down to the underside of this trend line here. This trend line was defined by this high, this high. Then we broke through those levels, and we moved to the upside at this point right here. And when the market started to move back to the downside during the trading here today, where we find support? Right against that trend line here. So we're going to be continuing to watch that trend line as we head into the night session, and it's going to be lower here, 163.26. So as long as we can't go higher, we may end up just floating back down to the underside of this trend line. So be aware of that. On the 5-minute chart here, we are seeing No, the market's testing the 100-bar moving average as we speak. That 100-bar moving average also corresponds with this trend line here. So this is a key level for the sterling versus US dollar. We're going to have an early indication here of whether the market has some momentum to the upside, or we're going to give up and start to move back to the downside in this currency pair. Let's move on to the dollar versus yen next, and this currency pair is back below that 24 level. I'm going to show this on the hourly chart. Very narrow trading range in the New York session here. As you can see, the low came in at 96, 97. The high came in around the 23 level. Only about 27 or so pip trading range. And the 24 level, that level is important. Why? You go to the daily chart here and you go back to the low, going back to 2010 low, came in at 24, and so the market had a peak today during the New York session, at least at the 24 level. Could not sustain any momentum to the upside and started to move sideways slash go a little lower. I want to change the slope of this moving average a little bit, or this trend line a little bit. It does look like we could see some more move back up to the upside here, but until the price gets above the 24 level, I'm not going to buy the any sort of bullishness here in the dollar versus yen. That's going to give me more confidence on a move above that 24 level for reasons off the daily chart and this chart. And if we do that, then the levels I'm going to have to get through is today's high, which came in around the 38 level, and then we're going to look up toward this upper trend line here, and this low area right here, which comes in at 80.55. 38.2% retracement comes in at 65. The dollar versus Swiss franc. Hourly chart, nice little trend line here. How many times market tested that line? Let's count them. 1, 2, 3, 4, 5, 6, 7. 7 different times the market came to that trend line and held. So what we're going to be watching here is this trend line, needless to say, at the 83.66 level. We are finding some support against the lows. We didn't reach the earlier low from early in from really the first couple hours of trading. Didn't come close to it for the rest of the trading day after moving up to test the trend line. So we're kind of have a bottom trend line coming in around the 43 level, and again the top side, if we get above the 66 level, we're going to be looking for a break of the high for the day to give us further confirmation of the upside. That'll be our next target level. Get to that target level, then we could see the market move up toward the 100-hour moving average. Let's take a look at the dollar versus Canada next, and this currency pair is stuck between this ceiling here at the 98.15 level, 14.5 to be exact, and 38.2% retracement at 97.75. Our 100 or 200 bar moving average is going sideways. It's now maybe the 6th or 7th day in a row where the moving average came sideways, and the 100-hour moving average is moving up and looking to cross over that 200 bar moving average. The fact that it crosses over and the price isn't really close to that level is not one of those threes a crowd situation, folks. So this market can go either way here. I'd be focused on the 14 level, focus on the 75 level down, and look for a break either to the upside or to the downside in the dollar versus Canada. That would make the most sense to me given this picture here in this currency pair. Let's take a look at the Aussie versus US dollar. This currency pair was in a narrow trading range here. We stayed below that trend line and moved down toward the 50% retracement with the fall in the euro versus US dollar. But like the euro, we still started to see a rebound back to the upside here, and we're testing the 200 bar moving average on the 5-minute chart. Not far from that 107.31 level is the 36 level, which is this old trend line here, which connected these different highs here. We had a little break to the upside, a little break to the upside here, but each of those failed a number of different times here where the market did test that old trend line. So I'm going to keep that thing in place. 37 level is where that level comes in. If it moves above the 37 level, things should be looking a little bit more stronger for that currency pair. The New Zealand versus US dollar trend line coming across here. We did break below it on Friday, the unemployment number, but moved off of that level. Today we tested it, and in between the 200 and that trend line now. 81.25 is where that level comes in. The 200-hour moving average comes in at 81.53. The 100-hour moving average comes in at 81.60. As far as key economic releases, I'm going to go back to the Aussie versus US dollar. Why? Because we do have an interest rate. Oh, by the way, the Aussie versus US dollar tested the 100-hour moving average. I didn't even notice that on the 5-minute chart. We were looking market coming down the 50% retracement on the corrective move to the downside, came right down to that 100-hour moving average. Oops, bad on me. Anyway, we have a Reserve Bank of Australia interest rate decision coming out at 12:30 Eastern time tonight. They're expected zero unchanged at 475. But any sort of comments from the central bankers, from the Reserve Bank of Australia, will be monitored very closely. So pay attention to that. This is Greg Michaelowski. Have a good night and good fortune with your trading.